Markets continue to move higher. Fundamentals don't matter. Macro doesn't matter. It's just moving higher. Now, outside of the S&P and NASDAQ, are there better opportunities? Lots to talk about. Sit back and let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing financial advisor. We have a registered investment advisory firm. Now, we do market updates like you're seeing today, podcast, new series called One Question, 1 Minute. So please do consider subscribing. As I mentioned in the opening, right, we are moving higher. Fundamentals, not great in a lot of circumstances. Not a lot of market breadth. We'll talk about that as we go forward. And there's some other factors, but there's not a lot that I see that's going to stop us from going higher. But do you want to buy at these levels? Probably not. So maybe we have some other opportunities. So lots to talk about. Let's start out and go into the big board. Let's start with a quick quote from one of the masters, Charlie Munger. Spend each day trying to be a little wiser than you were when you woke up. Day by day, and at the end of the day, if you live long enough, you will get out of life what you deserve, right? Constantly keep learning, changing, in our case, updating our process, and that's what we'll talk about today. So, starting things off, we always go through our market cycles, right? And this is based on a lot of our macroeconomic data. Right now, we have really moved over to here, cycle 2, growth accelerating, okay? But inflation is accelerating as well, which is an issue. Reminiscent of 2021, okay? So on the growth side, we've seen GDP grow quite a bit in the fourth quarter. Right now, the most recent number projection is about 2.5% for the first quarter. Now, in doing that, we have raised the deficit big time, okay? Just at the end of the month there, they added another $89 billion. Year to date, we have added $470 billion to our national deficit. It just continues to grow, and it is a problem, and it will affect us in some ways we'll talk about in a second. Now, one of the positive ways it affects things is through what's called financial conditions, right? The lower you go, the better the financial conditions, the loose financial conditions, and that helps the markets. This shows you where we were at the beginning of the year, which was really loose, and we're even looser today. We're back at levels we haven't seen since 2021 with all the issues we had at that time. So again, all being driven by government debt, okay? So one of the issues that we do have is inflation. Now, we saw our CPI, PPI number come in hot last week. This week we had PCE, which is the Fed's favorite gauge, and you can see it's soared, okay? So a cost of loose financial conditions, putting all this money into the system is really not only keeping inflation high, but driving it higher. Remember, when you see these 3% type numbers, they're rate of change, not actual inflation. So this is something we're going to continue to watch and see some opportunity, which we are in oil and some other areas as prices go up. Now, on the Fed side, this is a website that shows a projection of what's going to be coming. Here I've gone out to June, and it's showing you the percentages of a rate cut. Well, we started the year at 6. We're now saying 3. Apollo, big money manager, hedge fund, came out and said they don't expect any this year. I'm kind of in that camp, okay? Why? Well, look at those loose financial conditions, okay? The market going up. I mean, it's just crazy what's going up all over the place. So how do you start cutting rates now? Because inflation will really go out of control. So more to follow there. Let's go check out those charts. Only going to show 2 charts on the S&P, weekly and daily. Weekly will show trend. For me, that's 3 months or less. Trade, which is 3 weeks or less. So when you look at the weekly chart, what do you see? Obviously, right, we're in this bullish trend, but we're also showing some pretty extreme overbought conditions. We'll see how things go as we look forward. Now, on the daily chart, okay, a couple things in one of my signals I look for. All right, the first thing is, again, we're having this upside move, okay, has not been with a lot of volume, not a lot of market breadth, although it is improving a couple sectors we'll talk about in a second. Okay, but the big thing up here on relative strength, right? Relative strength, you peak, and then you get a series of lower highs, right? So you have lower highs on relative strength as the market goes up. I've discussed that this is a negative divergence. Now, has it mattered at this point, okay? But to say that we're due for a consolidation or a slight pullback would be an understatement. So not sure where we're going. I mean, we're definitely invested, but got to be careful here. Now down here, we're looking at the VIX at 13 and change. Obviously, those are buying conditions. And then down the bottom here, this is what we call full stochastic. That's one of our momentum signals, and it's positive, very positive. So from a charting standpoint, everything you see here is positive at this point. And if I were to look at anything, okay, it would be market breadth. So the first one is, this is the McKellen oscillator, so it's a momentum indicator, one of the ones I look at. This is for the NYSE, so the entire market, right? So what do you see, right? Down here, let me just move up a little bit. Okay, markets go up, right? And you can see momentum is pretty strong. Now, over here, we saw that, but then we went into this lot of negative in this area. And if I go to the right of the chart, positive, negative, positive, negative. So again, another one, a series of lower highs. So it's just showing not a lot of momentum, market breadth in the overall markets. And then I'll look at what's called new highs minus new lows on the entire markets, okay? And what do you see here? Well, if we go back to 2021, you're seeing surges of 700 companies, right? New highs minus new lows. Yes, we've seen improvements, but we're in the 245, 246 range. So again, it's moving up, but you're not seeing that big breadth, which does have me a little bit concerned. So next up, sector spotlight. Sector spotlight, I always like to start with the 10-year, right? It is a good indicator for us, right? So when yields go up, prices go down. Has not been a good place to own in any type of bond, so that traditional 60-40, that 40 has really lagged and has continued this year, has gone up, has seen some consolidation. Now, we sold we had a very small position in duration, want to see some things move down. We had a move on Friday. That's because of some economic data, which I'll talk about in the macro call-out section. But, at this point, we do see some signs, potential signs, right? This is relative strength porting down. That is your MACD, again, momentum indicator crossing over. So potentially, we might see a move to the downside, but I will say TBD, right? To be determined on that one, because it hasn't happened so far this year. Now, next up, healthcare. This is XLV, healthcare ETF. We do not own this, but we have individually, we added another one, our fourth healthcare individual stock on Friday. Don't give those out here on YouTube. But healthcare continues to be one of those good sectors. I've talked about broadening. This is one of those sectors that has been strong. Now, in the ETF, you can see it, had a little pullback. So you are buying at all-time highs. Tough to buy in here. That's why I'm looking for value with some individual stocks, okay? Next up, India. Okay, India this week came out with their GDP number. It was above 8%. Massive growth in India right now. We've owned this, we've owned this for quite some time, right? We've owned it. We had a little bit of a pullback, had an opportunity to add to this, one of our larger positions right now. Wish I added more, to tell you the truth, after some of the moves, but India continues to be one of those places. Again, with the S&P so stretched, can you find other opportunities where you see better growth? This is one of those areas that we're looking at. Next, let's talk about China and the opportunity. Okay, I'm going back to 2021, and you can see how far they've gone. They're down about 50-some% from your high to where we closed out yesterday. So to get back, right, I can show it there in the chart, about 112% upside potential, right? So they are slowly coming out of their problems, which has been pretty big, okay? So this week we started adding, actually last week I added one stock. This week we added an ETF. I'm showing you FXI, kind of the broad, large cap China ETF. Do not own this currently, okay, but just want to show you the chart. So here, when I'm looking at the S&P or the NASDAQ, all-time highs, fully stretched, or an opportunity here to bring alpha return to our portfolios, this is something that we're going to look for as we move forward. Next up, let's do our macro callouts. A new part of our videos are macro callouts. Just have a few here to give you a pulse on some things that are going on. Now, this is a building in Minnesota. I'll zoom in here showing you what it sold for, okay, an 80% discount. We've been talking about this, the commercial real estate problems out there. Here, Canadian pension plan sells a New York commercial property for $1. That's it. Can you believe it? Yes, it's true. Took over the debt, but did not pay for the property. That's really shocking. Friday or late Thursday, we had another bank which has had issues, had to restate again, started crashing, and they're having effects of this commercial real estate. So this is something on our radar, commercial real estate, because the impact of some of those regional banks. So we have to be aware of that. Okay. Next up, durable goods, still pretty low. You can see where we are that, some previous recessions, kind of flat, not much going on there. Over here, consumer sentiment deteriorated rapidly through February, right? As costs continue to accelerate, right? Now, here's ISM manufacturing. We're now in our longest period, sub 50, okay? Meaning those are recessionary type numbers. Not saying it's a recession, okay? They did have ISM new orders go up, but another thing that continues to struggle on the macro side of things. Now, signals and game plan, some of these I talked about, some are proprietary, but the full stochastic positive as of 218, again, that has kind of been out there. McKellen oscillator, bouncing back and forth. Our fractal, we use an AI fractal math program. That's been positive for quite some time. So on the option side, didn't get into that. That's something we really track very closely. Has flip-flopped quite a bit, but has been positive since 222. So when gamma's positive with options, buying begets buying, selling begets selling. So a good signal to follow. And then alpha strategy, another system we have, that does still hold a sell signal. I would expect that to change on Monday morning. So overall, pretty good picture. So as far as the game plan, we're continuing to add, looking for value with potential upside outside the S&P and the NASDAQ to hopefully bring some alpha long-term to our portfolios. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.